Okay, morning guys. Hope we are good to let's do a little recap of what we've learned this week and how to engage. So earlier we talked about the four candles that move the markets, which I told us we have one the doji, the hammer, three candle formation, four pink candle. Okay, so these four candles act as key points in the market. One, they give you sense of trend changing when the trend wants to change from bullish to bearish. And also, they serve as points of interest. That's why I've been hitting on these four candles. These four candles, they serve as points of interest. That's that. Then we talked about the three market phases, which are the consolidating markets, price bands, the bullish markets, where the market goes up, retrace a little, impulse, correction, goes up, retrace a little like that. Bullish markets. Then the bearish market, which on the reverse is coming downwards. Impulse, correction, impulse, correction, impulse, correction, impulse. So once you've noticed which of the market trends you are in, what do? You try engage using either of these candles. By engage, I mean you look for a trade opportunity. So now let's say we had this zone. Let's say we had these two zones, yeah? Point A here, point B. So market moved midway, came down to point A. Then you saw your doji candle or any of the four candles here. The market went up, came up a little, came down, came up, came down, came up. This is a bullish sentiment already. So how do you join the continuation to the upside? Let's go back to when market just tapped here. So let's say market came down, tapped here. You need to see the first correction leg taken, which is your impulsive push, a correction, and an impulse. This is the key things you need. First impulsive push, correction, and impulse. Once you've seen these 2 points, first impulsive push, correction, impulse, you can mark them out. This is your second impulsive push, first impulsive push. So once you've seen these 1, 2, 3, impulse, correction, impulse, you go for the extreme block. The origin of that first input, the origin of that first impulsive push, the origin of that first impulsive push, impulse, correction, impulse, the origin of that first impulsive push. Look there for either of these candles to form. Either you see a doji, a hammer, the three candle formation, or the engulfing candle. Once you see any of them there, you can place your buy limits below there at that zone. Then you target previous stop. Then for the bearish market, same thing. You need to see an impulsive push to the downside, correction, impulse, correction to tell you this is okay. We're in a bearish market setting. Then how do you engage? Let's say the market went up a little. Came to this point. It gave you form of reversal candles. Those four candles I taught us already. Then we saw this push to the downside. The first impulsive push, a correction, and an impulse. These are the key things you need. Impulse, correction, impulse. The 2 points of contact again. The first push, the second push. what do you need to always go for the extreme zone, then look out for either of those candles, either of those candles, either of the what's it called, the doji, the hammer, three candle formation, or the engulfing candle. Either of them you see. Once you've seen the first impulse, correction, impulse, you go to that extreme now. Place your sell limit there. You target the low. So that's the idea of that's how you engage using what we have learnt already. That's how you engage using what we have learnt already. Understand the market phases. Are you in a consolidating market? You stay put. Are you in a bullish market? Okay. Once you've seen the first impulsive push, the correction, and the second impulsive push, mark the first impulsive push, that first impulsive push, mark it out. Make sure you see the first leg, correction, second leg. Then look properly to that origin of the first push, the origin of the first push to see either of the four candles, either of the four candles. Once you see them there, place your limits or look for confirmation entry. We'll talk about that much later. Look for confirmation entry there and you go long. For the sell buyers, the same thing. You saw the previously bullish markets. Then you now saw those either of these candles telling you, okay, trend has reversed or trend might reverse. Once that stuff is done, you now need to see the first push to the downside, a correction, and a push. Then look at the extreme block, the first place of the first impulsive push to the downside. X-ray the zone for either of these four candles, either of these four candles. Once you see any of them there, you place your limit there. Put your SL above, target the lows as your TP, or you go lower for your entry criteria. So that's very basic of these uh of these entry criteria. So the next video I will show us proper examples, like live chart examples of this stuff. So get used to it. Okay guys, until next video, stay put. Peace.